Question 1. Coverage types. Under a standard Colorado homeowners insurance policy, which of the following is not covered under personal property coverage? Coverage C. A. Personal electronics such as laptops and tablets. B. Jewelry with a value over $5,000. C. Furniture damaged by a fire. D. Clothing damaged by a vandalism incident. Answer: B. Jewelry with a value over $5,000. Explanation: personal property coverage, coverage C, typically covers personal belongings such as electronics, furniture, and clothing against various perils. However, high-value items like jewelry often have specific limits under standard policies. For jewelry exceeding certain values, policyholders often need to purchase additional coverage through endorsements or riders to ensure full protection. In Colorado, as in many other states, standard policies usually have a sublimit for jewelry, often around $1,000 to $2,500, and anything above this amount requires additional coverage. Question 2. Policy endorsements and special coverages. Which of the following is a common purpose of an endorsement or rider added to a Colorado homeowners insurance policy? A. To change the policyholder's deductible amount. B. To exclude specific types of damage from coverage. C. To increase coverage limits on specific high-value items. D. To reduce the policy term. Answer: C. To increase coverage limits on specific high-value items. Explanation: endorsements and riders are used to modify a standard insurance policy by adding or changing coverage. Common purposes include increasing coverage limits on specific high-value items, such as fine art or expensive jewelry, which are not adequately covered under the standard policy limits. Options such as changing the deductible amount or policy term typically require separate adjustments to the policy rather than endorsements. Exclusions are generally detailed in the standard policy or can be added through exclusions, not endorsements. Question 3. Scenario-based analysis. Mrs. Roberts recently experienced a significant water leak that caused damage to the flooring and her personal belongings in her Colorado home. She has a standard homeowners insurance policy with a water backup endorsement. What should Mrs. Roberts do to ensure her claim is handled properly? A. Wait for the insurance company to contact her first before taking any action. B. Immediately begin repairs to the damage and document the repairs with photos. C. Report the loss to the insurance company, document the damage and any temporary repairs, and keep all receipts. D. File a claim only if the damage becomes more severe over time. Answer: C. Report the loss to the insurance company, document the damage and any temporary repairs, and keep all receipts. Explanation: in the event of a water leak or similar damage, Mrs. Roberts should promptly report the loss to her insurance company and document the damage thoroughly. It is crucial to keep records of any temporary repairs made to prevent further damage and maintain all receipts for repairs and related expenses. This documentation will support her claim and ensure proper processing. Immediate action, including reporting and documentation, is essential in the claims process to adhere to the policy's duties after a loss. Waiting or delaying can jeopardize the claim's approval and may result in reduced compensation. Question 4. Risk assessment and underwriting. Which of the following factors is most likely to increase the premium for a homeowner's insurance policy in Colorado? A. Installing a security system with monitored alarms. B. Living in a community with a high fire risk due to proximity to wooded areas. C. Maintaining a well-maintained property with no known hazards. D. Adding a windstorm endorsement to the policy. Answer: B. Living in a community with a high fire risk due to proximity to wooded areas. Explanation: insurance premiums are significantly influenced by risk factors associated with the property's location. Living in an area with a high risk of fire, such as near wooded areas, increases the likelihood of fire-related claims, leading to higher premiums. Installing security systems or adding endorsements can mitigate risks, but typically does not reduce the premium as significantly as high-risk location factors can increase it. Maintaining a hazard-free property is favorable but does not directly impact premium levels as much as location-based risks. Question 5. Claims process and procedures. When a Colorado homeowner files a claim for damage caused by a covered peril, which of the following is not a recommended step in the claims process? A. Provide the insurance company with a detailed inventory of damaged items. B. Allow the claims adjuster to inspect the damage before making any repairs. C. Immediately dispose of damaged property to avoid additional damage. D. Keep all receipts related to temporary repairs and damage mitigation. Answer: C. Immediately dispose of damaged property to avoid additional damage. Explanation: Homeowners should not dispose of damaged property before the claims adjuster has inspected it. Keeping the damaged property allows the adjuster to assess the extent of the damage and validate the claim. Providing a detailed inventory and keeping all receipts for temporary repairs are crucial for a smooth claims process. Immediate disposal can hinder the investigation and potentially affect the claims outcome. Question 6. Policy components and structure. Which section of a Colorado homeowner's insurance policy typically outlines the responsibilities of the policyholder after a loss has occurred? A. Declarations page. B. Insuring agreements. C. Conditions. D. Exclusions. Answer. C. Conditions. Explanation. The conditions section of a homeowner's insurance policy details the policyholder's responsibilities and duties after loss, such as reporting the loss promptly, protecting the property from further damage, and cooperating with the insurance company's investigation. The declarations page provides summary information. Insuring agreements outline what is covered, and exclusions specify what is not covered. Question 7. Coverage types. Under Colorado homeowners insurance, which of the following types of coverage is designed to provide financial assistance for temporary living expenses if the home becomes uninhabitable? A. Liability coverage. B. Additional living expenses coverage. D. C. Dwelling coverage. D. Personal property coverage. Answer. B. Additional living expenses coverage. D. Explanation. Additional living expenses coverage D is specifically intended to cover the cost of temporary living arrangements such as hotel stays and meals if the insured home is rendered uninhabitable due to a covered loss. Liability coverage pertains to legal responsibility for injury or damage. Dwelling coverage protects the home structure itself, and personal property coverage covers belongings inside the home. Question 8. Colorado-specific regulations and requirements. In Colorado, which type of coverage is typically required to be purchased separately if the homeowner's property is located in a flood-prone area? A. Earthquake coverage. B. Flood insurance. C. Windstorm endorsement. D. Liability coverage. Answer. B. Flood insurance. Explanation. In Colorado, flood insurance is usually required to be purchased separately as it is not typically included in standard homeowners insurance policies. Earthquake coverage is also often purchased separately but is less common in Colorado compared to flood insurance. Windstorm endorsements and liability coverage are additional options that may not be required but can be added to enhance coverage. Question 9. Policy endorsements and special coverages. What is the primary purpose of an umbrella policy in conjunction with a homeowner's insurance policy? A. To increase the coverage limit for high-value items like jewelry. B. To provide additional liability coverage beyond the limits of the homeowner's policy. C. To cover flood damage not included in the standard homeowner's policy. D. To reduce the overall premium cost of the homeowner's insurance. Answer. B. To provide additional liability coverage beyond the limits of the homeowner's policy. Explanation. An umbrella policy provides additional liability coverage above and beyond the limits of the primary homeowner's insurance policy. It is designed to offer extra protection in case of major claims or lawsuits. While it may also cover certain gaps in the primary policy, its main function is to extend liability coverage. It does not primarily address high-value items, flood damage, or reduce premium costs. Question 10. Practical applications. Mr. Thompson's home was recently damaged by a hailstorm and he has a homeowner's insurance policy with an actual cash value SEV cause. Which of the following best describes how the insurance payout will be determined? A. The payout will be based on the replacement cost of the damaged property without considering depreciation. B. The payout will be calculated by subtracting depreciation from the replacement cost of the damaged property. C. The payout will be based on the original purchase price of the damaged property. D. The payout will be determined by the market value of the damaged property at the time of the loss. Answer. B. The payout will be calculated by subtracting depreciation from the replacement cost of the damaged property. Explanation. Under an actual cash value SEV policy, the insurance payout is calculated by taking the replacement cost of the damaged property and subtracting depreciation. This means that the payout reflects the current value of the property considering its age and wear. It does not cover the full replacement cost, which would be the case under a replacement cost policy. The original purchase price or market value are not typically used in a CV calculations. Question 11. Fundamental concepts. Which of the following best defines insurable interest in the context of homeowners insurance? A. The financial stake a policyholder has in preventing loss or damage to their property. B. The legal requirement to disclose all personal information to the insurance company. C. The obligation of the insurance company to offer coverage for all types of risks. D. The right of the policyholder to cancel the policy at any time without penalty. Answer A. The financial stake a policyholder has in preventing loss or damage to their property. Explanation: insurable interest refers to the financial stake a policyholder has in protecting their property from loss or damage. It is a fundamental concept in insurance that ensures the policyholder would suffer financial loss if the insured property were damaged or destroyed. It is not about disclosure obligations, company coverage requirements, or policy cancellation rights. Question 12. Coverage types. In Colorado homeowners insurance, which of the following typically requires a separate endorsement or rider to be fully covered? A. Theft of personal property from the insured home. B. Damage to the home caused by a covered peril such as fire. C. Loss of valuable items such as artwork or rare collections. D. Medical payments to others for injuries occurring on the insured property. Answer: C. Loss of valuable items such as artwork or rare collections. Explanation: losses involving valuable items like artwork or rare collections usually exceed the standard coverage limits of a homeowner's policy and often require additional endorsements or riders to ensure full coverage. Theft and damage by covered perils are typically included in the standard policy, while medical payments for injuries are usually covered up to a specified limit. Question 13. Policy components and structure. Which section of the homeowner's insurance policy specifies the perils that are covered under the policy? A. Conditions. B. Exclusions. C. Declarations page. D. Insuring agreements. Answer: D. Insuring agreements. Explanation: the insuring agreements section outlines the perils covered by the policy. This section details the risks and events that the insurance company will cover, such as fire, theft, or vandalism. The conditions section describes the policyholder's obligations, exclusions list what is not covered, and the declarations page provides summary information about the policy. Question 14. Colorado-specific regulations and requirements. According to Colorado state regulations, which of the following is not a required disclosure that must be provided by the insurance company to the policyholder? A. Information on flood insurance availability. B. Details of coverage for earthquake damage. C. Explanation of policy renewal terms. D. Disclosure of any policy exclusions and limitations. Answer: B. Details of coverage for earthquake damage. Explanation: in Colorado, while insurance companies must provide disclosures about flood insurance availability and policy exclusions and limitations, coverage for earthquake damage is typically not required to be disclosed in standard homeowners policies because earthquake coverage is usually an optional add-on. The explanation of policy renewal terms is follow. A required disclosure. Question 15. Claims process and procedures. If a Colorado homeowner discovers additional damage after initially filing a claim, what should they do? A. Wait for the insurance company to discover the additional damage during their review. B. Notify the insurance company immediately and provide information on the newly discovered damage. C. File a new claim for the additional damage separately. D. Ignore the additional damage if it does not significantly affect the original claim. Answer: B. Notify the insurance company immediately and provide information on the newly discovered damage. Explanation: policyholders should notify the insurance company immediately if they discover additional damage after filing a claim. The insurance company needs to assess all damage to provide a complete and accurate settlement. Ignoring the damage or filing a separate claim can complicate the process or result in incomplete coverage. Question 16. Policy endorsements and special coverages. What is a common benefit of adding a scheduled personal property endorsement to a homeowner's insurance policy? A. Reduces the overall premium cost of the policy. B. Increases the coverage limit for specific high-value items. C. Eliminates the deductible for covered claims. D. Expands coverage to include additional perils. Answer: B. Increases the coverage limit for specific high-value items. Explanation: a scheduled personal property endorsement increases the coverage limit for specific high-value items such as jewelry, artwork, or collectibles, which are often subject to lower limits in standard policies. It does not typically reduce premiums, eliminate deductibles, or expand coverage to new perils. Question 17. Risk assessment and underwriting. Which factor is least likely to be considered when assessing the risk of insuring a home in Colorado? A. The age of the home. B. The proximity of the home to a fire department. C. The policyholder's credit score. D. The historical property tax rate of the home's location. Answer: D. The historical property tax rate of the home's location. Explanation: when assessing risk, insurers typically consider factors such as the home's age, proximity to emergency services, and the policyholder's credit score. Historical property tax rates are generally not a factor in risk assessment for insurance purposes, as they do not directly impact the risk of loss or damage to the property. Question 18. Consumer protection and ethical considerations. Which of the following is a key component of consumer protection in homeowners insurance? A. Ensuring the policyholder receives the lowest premium possible. B. Providing clear and accurate information about coverage options and limitations. C. Guaranteeing the fastest claims settlement regardless of policy terms. D. Allowing policyholders to amend their policy terms without any restrictions. Answer: B. Providing clear and accurate information about coverage options and limitations. Explanation: consumer protection in homeowners insurance involves ensuring that policyholders receive clear and accurate information about their coverage options and limitations. This transparency helps policyholders make informed decisions. The other options: lowest premiums, fastest settlement, and unrestricted policy amendments are not standard consumer protection components and may not reflect fair practices. Question 19. Practical applications. If Ms. Johnson's home insurance policy has a replacement cost coverage clause, how will the payout differ if her home is damaged beyond repair? A. The insurance will pay the current market value of the home. B. The insurance will pay the amount necessary to replace the home with a similar one without depreciation. C. The insurance will pay the original purchase price of the home minus depreciation. D. The insurance will pay only for the cost of the land, not the structure. Answer: B. The insurance will pay the amount necessary to replace the home with a similar one without depreciation. Explanation: replacement cost coverage ensures that the payout is sufficient to replace the damaged property with a new one of similar kind and quality without accounting for depreciation. This differs from actual cash value, which subtracts depreciation from the replacement cost. Question 20. Policy components and structure. Which of the following would be found in the declarations page of a Colorado homeowner's insurance policy? A. A detailed list of covered perils. B. The amount of coverage for personal property. C. The policyholder's responsibilities after a loss. D. Information about policy endorsements and riders. Answer: B. The amount of coverage for personal property. Explanation: the declarations page provides a summary of key details, including the amount of coverage for personal property, property description, and policy limits. It does not typically include detailed information on covered perils, policyholder responsibilities after a loss, or endorsements and riders, which are found in other sections of the policy. Question 21. Coverage types. Which of the following best describes liability coverage ECA homeowners insurance policy? A. Coverage for medical expenses incurred by the policyholder for injuries sustained on their property. B. Protection for the policyholder against claims for bodily injury or property damage caused to others. C. Coverage for the cost of repairs to the policyholder's home following a covered peril. D. Compensation for loss of rental income if the insured home becomes uninhabitable. Answer: B. Protection for the policyholder against claims for bodily injury or property damage caused to others. Explanation: liability coverage in a homeowner's insurance policy protects the policyholder against legal claims for bodily injury or property damage caused to others. It does not cover the policyholder's own medical expenses, home repairs, or loss of rental income, which are addressed by other types of coverage. Question 22. Policy endorsements and special coverages. Which endorsement would be most appropriate for a homeowner who wants to cover potential losses due to sewer backup? A. Flood insurance endorsement. B. Earthquake coverage endorsement. C. Water backup endorsement. D. Scheduled personal property endorsement. Answer: C. Water backup endorsement. Explanation: a water backup endorsement is specifically designed to cover losses due to sewer or drain backups, which are typically not covered under a standard homeowner's policy. Flood insurance endorsements cover flood-related damage, earthquake coverage addresses earthquake damage, and scheduled personal property endorsements increase coverage limits for high-value items. Question 23. Colorado-specific regulations and requirements. According to Colorado state regulations, which of the following is not a standard requirement for homeowners insurance policies in the state? A. Coverage for flood damage. B. Disclosure of coverage limits for natural disasters. C. Availability of optional earthquake coverage. D. Provision of information about insurance fraud. Answer A. Coverage for flood damage. Explanation. Flood damage is generally not covered under standard homeowners insurance policies in Colorado and requires a separate flood insurance policy, while policies must include disclosures about coverage limits, optional earthquake coverage, and fraud information. Flood coverage is not included as a standard requirement. Question 24. Claims process and procedures when filing a homeowner's insurance claim. Which document is essential for the initial claim submission? A. Proof of the home's current market value. B. The original purchase agreement of the home. C. A detailed inventory of damaged or lost property. D. Evidence of home maintenance records. Answer C. A detailed inventory of damaged or lost property. Explanation. A detailed inventory of damaged or lost property is essential for filing a claim as it helps the insurer assess the extent of the loss and determine the appropriate payout. The other documents, such as proof of market value, original purchase agreement, and maintenance records, are not typically required for the initial claim submission. Question 25. Risk assessment and underwriting. Which factor would least likely impact the underwriting decision for a homeowner's insurance policy? A. The age and condition of the home. B. The homeowner's credit history. C. The color of the home's exterior paint. D. The presence of security systems in the home. Answer C. The color of the home's exterior paint. Explanation. The color of the home's exterior paint is generally relevant to the underwriting decision. Factors such as the home's age and condition, the homeowner's credit history, and the presence of security systems are more relevant to assessing risk and determining premiums. Question 26. Practical applications. If Mr. Smith's home is damaged by a covered peril but he is unable to live in it while repairs are made, which coverage would help him during this period? A. Liability coverage. B. Dwelling coverage. C. Additional living expenses coverage. D. Medical payments to others coverage. Answer C. Additional living expenses coverage. Explanation. Additional living expenses (AL) coverage helps cover the costs of temporary housing and other expenses if the insured home is uninhabitable due to damage from a covered peril. Liability coverage addresses claims for damages to others. Dwelling coverage is for home repairs and medical payments to others is for injuries to guests. Question 27. Policy components and structure. In a homeowner's insurance policy, which section would detail the responsibilities of the policyholder following a loss? A. Exclusions. B. Conditions. C. Insuring agreements. D. Declarations page. Answer B. Conditions. Explanation. The conditions section outlines the policyholder's responsibilities following a loss, including how to report the claim and cooperate with the insurer. Exclusions specify what is not covered. Insuring agreements outline covered perils, and the declarations page summarizes key policy details. Question 28. Consumer protection and ethical considerations. Which of the following actions is considered an ethical practice for insurance agents? A. Promising to lower premiums if the client provides personal information. B. Clearly explaining policy terms and coverage options to the client. C. Offering to cover a client's deductible in exchange for a policy renewal. D. Withholding information about potential policy exclusions to secure a sale. Answer B. Clearly explaining policy terms and coverage options to the client. Explanation. Ethical practice involves clearly explaining policy terms and coverage options to ensure that clients make informed decisions. Promising lower premiums for personal information, covering deductibles for renewals, and withholding information about exclusions are unethical practices that can mislead clients. Question 29. Coverage types. Which valuation method provides compensation based on the current replacement cost of the damaged property without considering depreciation? A. Actual cash value. B. Market value. C. Replacement cost. D. Salvage value. Answer C. Replacement cost. Explanation. Replacement cost valuation provides compensation based on the cost to replace the damaged property with a new item of similar kind and quality without deducting for depreciation. Actual cash value considers depreciation. Market value is the current value of the property, and salvage value is the estimated value of the property after a loss. Question 30. Colorado-specific regulations and requirements. Which of the following best describes Colorado's approach to earthquake insurance? A. Earthquake insurance is included in all standard homeowners policies. B. Earthquake coverage is optional and available through a separate policy or endorsement. C. Earthquake coverage is automatically provided if the home is located in a high-risk area. D. Colorado state law requires all homeowners policies to cover earthquake damage. Answer: B. Earthquake coverage is optional and available through a separate policy or endorsement. Explanation: in Colorado, earthquake coverage is not included in standard homeowners policies and is available as an optional separate policy or endorsement. It is not automatically provided or required by state law for all homeowners policies.